Hello, everyone. Hope you had a wonderful week last week. Let's go ahead and just drop right into it here. Looking at the dollar index from last week's video, there really isn't much to update. I am still anticipating further upside here by the dollar, looking for it to challenge the 61.8 reverse fib at around 97.70 and potentially even breaking that level and pushing up into the 98 level. But near term, definitely focused on that 97.70 level. It's key. We've tested it a few times over the past few weeks. In fact, after we had broken down back in 2017 from the highs here, this was an area that we were looking at for support. And as you can see here, once we got below it, that 61.8 was really the key level to watch. So again, 97.70, still looking for that level to be tested. Probably will happen this week, and just make yourselves aware, if you're not already, that we do have more Brexit drama that we're going to be dealing with this week. So if the pound starts getting pummeled, look for dollar strength and due to the inverse relationship. So dollar still looking for further upside, so remaining bullish here. Again, not much to update here. Still looking for the near-term test, 97.70s, and then we'll talk about maybe reaching into those 98s or even a little bit better 98.30-ish area. But for now, near term, looking for 97.70 to get tested. Let's go ahead and just take a brief look at gold here. Gold hasn't really done too much over the course of the past week. It tried to get some bullish mojo, but it just wasn't happening. And with the whole Brexit situation, having those safe haven bids coming in, I just don't see it just yet. And when we do have this Brexit situation, whether or not they get the extension this week, that remains to be seen. So I would say that yes, gold should continue to see some resistance here. It obviously fell below that 23.6 fib, which is around that 12.97 level. I believe I mentioned in my last video. There is potential for it to kind of chop around in here on the lower level timelines or time frames, excuse me. There's a lot of confluence in this general 1297, 1290 area. So again, it tried to do a nice little recovery here off of some lows here. It just couldn't get any type of upside penetration. So again, still thinking that we're going to go ahead and see a further push to the downside here. Don't know how fast it's going to happen. Clearly, I'm not a fortune teller. I'm just looking at the charts, and what I'm seeing here is still selling pressure coming in. So that with the bullishness of the dollar to be expected here, again, it could be a drop and then a nice strong recovery. If we do get those safe haven bids coming in, we'll have to see how it all plays out. It's a lot of different things going on right now in the market. We're near all-time highs, with the major indices, et cetera, et cetera. So with everything that's happening right now, still targeting downside. We do need to break, cleanly and close below that 1286. That happens, we start pushing back down into the next fib zone first, usually around that 50% way mark between the 23.6 and 38.2. You might see some support around that 1270 level. Beyond that, if that does break down, then we should see another continuation move to about the 1250, 1252-ish area, looking at those lower level time frames. So again, bearish on gold near term. I do think that we're going to see a strong recovery at some point, but right now I just don't see it. So again, I myself am just waiting on the side here, just watching this develop, seeing what happens. I don't like the whole Brexit situation. I mean, the headlines just keep flowing through, the futures feeds, and it just really gets old, and I try to just drown it out. But long story short, dollar bullish. We have gold looking bearish here. Decent looking weekly candle. I'm not going to sit here and say that a nice little hammer is not a bullish thing, but we did have that resistance, unable to close into the real body of this candle here, and that is below the 23.6. So still looking for a break and close below 1286. Further downside around that 1251 level. So let's go ahead, go forward. Crude oil, interesting week again this week, and it was looking pretty good, unable to break below that 61.90 level, and then we had the whole Libya news headline start getting pushed out towards I think it was like mid-morning on Friday or so. But again, was looking for that further downside move after we hit that 62.70-ish area, but with the geopolitical risks starting to bubble up, things are starting to change up a little bit. So that being said, you have to adjust, and that's fine. I myself was in a trade, got stopped out. Hey, it is what it is. It's the name of the game. Just have to keep that risk management tight. If you do that, and even when you're wrong, it doesn't hurt. It gives you that flexibility to reassess the situation and then get back into a better trade setup. So again, looking at what crude is showing right here, you can see that we've been having a nice little channel for several weeks now, and now we're just breaking out here, looking very, very strong. It is possible for us to continue to climb up here. What I'm seeing on a lower level time frame, I'm looking for that 64 level to be hit now. Again, with the geopolitical risks in play now, and uncertainty what's happening with Libya, it's not out of the question for us to even run up into 65. I'm not going to sit here and try to fight this. Just let it go. Next fib level is at 23.6 near 65, so I'm going to be paying attention for that. Going to give her room to run, see what happens. I'm not going to be chasing this one. I'm just going to be waiting, watching those lower time frames for the next clues, because if we do see a little bit of a relief in the geopolitical arena, then we might get a nice little pullback here. But again, waiting for this move to finish out and then start looking for some short opportunities here. But for right now, still looking fairly bullish. I'm not going to go ahead and deny that. Up to 64 at minimum, but with good potential to get up into the 65 level sometime this week. And lastly, we'll take a look at natural gas. A very, very slow mover these days. I myself have just been staying away from it. In fact, I'll just drop down to the daily time frame, try to get in here a little bit closer. But what I've been seeing here is, number one, was expecting the move to come down to near that 786 level, which we've pretty much gotten on the reverse fib level. That is, we're at that 786. We bounced up real nice, back up again into the supply zone, and I believe, okay, that 268 or 269 should end up holding as resistance. In the event that we do break, your upside resistance is going to be near that 271 zone, and that should hold up as well. And then we should see continuation downwards here, breaking below the 262. I think it was 262.5 to be exact, but it's harder to tell on a daily. And anyway, I still believe we are going down into the 254 zone, and then we'll probably see another bounce back up into around that 262 to 2.65-ish area, and then we'll have to see if we can go ahead and break out of this selling pressure that we've been in for several weeks now. So that being said, it looks like oil is continuing to grind up. Gold looking fairly bearish, I would say. Just watch the dollar. It should be continuing to go upside. If it has a little bit of a relief, it might give gold a little bit of an edge to pop up. And again, watch that 1290, 1295, 1297 zone. And then, if the dollar starts, pushing back up, obviously gold's going to reverse pretty hard, challenge the 1286, break down further to the target 1251 range. Crude oil up to 64, potentially 65. Natural gas still looking for 254. Hope you all have a wonderful and green trading week. I will update you all next weekend as usual. Have a wonderful, wonderful week and stay safe. Use your stops. I'll talk to you all soon.